Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Well, it's been a long time, but now finally CFTC has been able to catch up with the COT reports. So from now on, we're going to be up to date, and I will continue these COT reviews. So today we're going to have a look at the 9th COT report of 2019. And starting off with silver, which is on top of our list with respect to largest changes in commercials positions, 28%, as you can see here on the table. And on the chart, you can see that change size over there. It is unquestionably one of the largest changes in the past 52 weeks. Of course, it is a bullish COT change signal, suggesting early this week we can see higher prices coming. But of course, if we jump to the 5-year chart and examine the COT Extreme situation, you may see that we're actually, with this change, just moved away from this relative bearish extreme. Not necessarily the largest. Of course, you can see much greater changes in the past, but it is definitely a change, an extreme that was significant enough to pull prices back down. As you can see, that's what happened in the last 2 weeks. And of course, that means the big question is which direction in the medium to long term will silver go? Well, judging by this last extreme signal, we can expect further declines coming. But we shouldn't forget about this huge all-time COT extreme, which we've never seen in the past before that. Moving on to cocoa, where we have a 18% change in commercials positions. You can see that change over there, bringing commercials net long. Large speculators became net short. Again, we are talking about a bullish COT change signal. And jumping to the 5-year chart, you can see that we are gradually getting closer and closer again towards bullish COT extreme levels. The last bullish extreme was back over here, as it was an effective signal. Then we've moved away from those levels, coming to a bearish extreme, which of course again was a successful signal pushing prices back down. The next market is the gasoline, again with an 18% change in commercials positions. Of course, as you can see on this chart, this 18% is not that huge. We've seen similar changes in the past many times. It is bullish, of course, but as you can see from the price actions, we are already expecting further further increases in the market. Back to the going over to the 5-year chart, we can see how extreme this market is currently. Well, the most bullish extreme that we had in the past 5 years was back from 2017, and of course we can find the most bearish extreme, which was in the second part of 2018, which signaled this relative top over there, and since then the price of gasoline has been declining. Now since then we've reached relative bullish extremes, not all time or close to all time or anything like that, and we can see prices coming back to more higher territories. We're more or less in between those two extremes. So basically from the COT extremes perspective, it's a bit difficult to tell in which direction the market will continue. So I would always, in such a case, recommend to analyze correlating markets such as crude oil, natural gas, and to come up with a conclusion from those, if possible, of course. Moving on to large speculators COT extreme, we have the euro on top of our list with 115 report extreme. Now jumping to this 5-year chart, we're going to see that on this wider time frame. You can see that we are gradually moving away from this bearish extreme, which was present basically a year ago, early 2018. That coincided with this top in the market. Since then, the euro has been decreasing against the dollar, and of course, as it was doing that, traders have been changing their positions accordingly. Now, of course, one might ask whether or not we've reached a bullish extreme that would signal higher euro against the dollar. Now, if you look at this 5-year chart, you can see that there are definitely much greater extremes possible in this market. We're pretty far away from those levels currently. So judging by that, we can expect this continuation of declining euro against the dollar in the medium to long term. Nevertheless, this can be considered a relative bullish extreme, so we might see a bit of a rebound in prices, but eventually we should get a very significant all-time or close to all-time extreme to really say that there's a major change in the trend. Rough rice is our next market. There's 112 report extreme over there. Jumping to the 5-year chart, this will become visible, and it is. Here you go. So we are definitely in bullish territories, not at an all-time, but definitely getting close to those levels. You can see at similar extreme levels what the market was doing. So you can see here we have a bottoming phase from 2016 to 17. We had this bullish extreme for quite some time. That ignited this rally. Again, prices have decreased. Of course, we had bearish extreme signals before that, and now we've reached bullish extreme levels, suggesting there could be a further increase in the rough rice market. And our last market for this review will be live cattle, where we have this modest 67 report extreme, but nevertheless we're going to have a look at it. And of course, here you go, you can see that the 67 report extreme, which just judging by the number wouldn't seem to be large, but by looking at the charts themselves, you can see that we are definitely at very significant bearish extreme levels. Even small speculators, as you can see, they're at a 360 report extreme. So very, very significant extremes in this market, suggesting there could be a top coming soon, and we could expect lower prices in live cattle. So that was all for this review. As I stated in the beginning of the video, I'm hoping to continue these reviews on a weekly basis. Now that CFTC is back to normal, we should be able to do these COT reviews. So thank you for your attention. I hope you enjoyed this video, and I hope to see you next week. Or actually this weekend, because it's Monday today. Take care and have a nice week. Bye-bye.